Welcome, welcome, welcome. It's Trey coming to you live from my Harmonic Trading Club with another video. This time we want to talk about Tesla, long or short. Which is it? Um, there's something that I identified which makes going long on Tesla for traders that have a long bias, um, a little bit problematic, and I want to talk about why that is. But at the same time, I said long or short, and I want to talk about opportunities for traders that have a long bias. So, first, for the traders that have a short bias, very interesting enough, way back 3 years ago, November of 2021, that's basically where I have my cursor at, where this whole thing started, and it brings forth something that kind of there really is no trend. We're on the weekly chart. There really is no trend. It's more sideways. It fits inside of a box. It's really, you kind of can see like what some people would consider a bearish trend here, and then you kind of come up. You got a correction, of course. You got a correction back down, and then you got a correction coming back up. But something very interesting happened as that was taking place over the last 3 years. It formed one of the most powerful indicators on the market. Uh, if we're talking advanced pattern recognition, and that is in the form of a bearish advanced Gartley pattern. So identifying this impulse here, right? Identifying this impulse here. Remember, this is the Harmonic Trading Club, so we always want to approach almost everything we do harmonically first, or see what type of harmonic opportunities are presenting themselves. Identifying this impulse here and then its correction to try to identify and see why we ended up where we are. So with this impulse here, and this basically being the X, right, and this being A, right? So identifying that impulse, which is the X to A, and then the retracement or correction is B, right? So for this particular pattern, we want to talk about the advanced Gartley pattern. It requires a 618 retracement from the X to A leg. So you see, you wick up and you hit that 618. Um, Going a little bit deeper, the rule stipulates that the retracement must hit the 618 but cannot touch the 786. 786 is way up here. The retracement, of course, is not. So it's kind of giving you like a perfect Gartley pattern. This is C down here. Um, and since I'm talking about it, I'll just talk about the requirement for a valid C leg. And the C leg is simply a 618 retracement. Must hit the 618 retracement of A to B. This is A and this is B. So you guys can see that criteria is met too. That 618 retracement is met too, right? So for a valid, so we know the C leg is valid as well. So I don't need the 786 on here because to validate C, you only need a 618 retracement of A to B, valid C leg. So everything is lining up perfectly for this Gartley pattern. The next thing is, where is the D leg entry, the D leg completion of a Gartley pattern? So when you have your X to A and your 618 for valid B, and then you have your A to B and a 618 retracement for valid C, your D leg, right? And on this particular pattern, the advanced Gartley pattern, and I'm giving this away on the house. A lot of people pay a lot of money for these, but at the Harmonic Trading Club, our eyes are so trained. We just have such a strongly trained reticular where we're going to identify these things if they're present. And that's why you see that's how I started this video off like this. So again, trying to identify where D is, it's a 127 extension of the A to B leg. So if I grab the Fibonacci extension tool and measure from A to B to the wick on B and come back, and I simply just drop on just the 127 extension, you'll see that price action came up to the 127 extension, was overbought at the time. You see some bearish divergence coming in. So this is giving traders who have a long-term short bias on Tesla at this point in time reason and confirmation that they might be successful. I'm not saying they are, but they might be. Remember, this is just a conversation, And we're combining that with some education to talk about what we see. So let's just go ahead and throw the body on here. So we can go full circle so we can get on to the next part of the video. So this could be problematic for traders with a long bias, but it's making traders with a short bias very happy because this Gartley pattern is filled. Um, they might even be inclined to load up, take large position sizes, and just wait this thing out, win or lose, because it has such a high success rate. You know, its conversion rate is it's pretty high, usually above 60%, and can be as high as 66, 67%. And when in the way that these react, and you see it all coming to take place. It's not a coincidence that you have these two bearish after all of this bullish action. The thing slowed down. He wicked up. First of all, you get the price action wick up. You got some bulls take another weak try, but then you got this basically kind of like this hammer candle here, closing red. Bulls come trying to take it, but the bears, they might have something to say about this. I can't say for sure. All I know is that you gotta be able to identify what you can identify. So that would be a case for a trader with a short bias. Let me give you guys a reminder, as I had put the disclaimer up at the beginning of all my videos. I do not provide trade advice or give trade signals or tell people what to do with their capital in the financial markets. Always consult with the financial advisor of your choice or the professional of your choice when it comes to what you're going to do with your capital in these markets. They can be very volatile and you can lose all or some of your capital depending on what happens. Okay, so we talked about that. We broke that down. But let's say you're a trader. What about the traders that have a long bias, right? Let's look at this from a let's come in we're going to come in a whole lot closer, and we're going to look at Tesla for traders that have a long bias. But in order to do that, we got to come closer because we can't get a long bias off of the weekly chart. I mean, I'm gonna just throw one more thing in here. The A to B is equal to CD pattern, in which that Gartley pattern is built off. So if A to B is equal to C and D, okay, C and D, then they have another reason for entry because an A to B is equal to CD pattern that's completed and filled. And again, they would be expecting a rollover at the end at the completion of the A to B is equal to CD pattern. With stops, let's say here's D, and they basically have stops. Wrong indicator, sorry. They basically would have been entering right around the completion of the A to B is equal to CD pattern, next candle. So it would have finished there. They would have entered here on the green one, and they basically would have had stops like around targets right here, and they would have had stops right above it, basically, right? Excellent opportunity. That's an excellent. I like the look and thought of that. It carries very low risk for the traders who have a short bias, but I needed to come back and do that just as we just dive deeper. Okay. Now, again, for those traders that have a long bias, we would have to come in a lot closer, right? So just jumping into the 4-hour chart, this allows us to see some of that action that was taking place. Gartley pattern filled. You see bears immediately try to come in and take it. It doesn't work. Doesn't work. Bulls fight back, push it way up here. Actually close above the last high. Okay. Bears still trying to hang in the fight. Come in, take another shot, and then bulls taking another shot. Now, remember how I had just talked about the A to B is equal to CD pattern? You kind of got the same type of action here, and this is what's probably going to build the long bias for traders who have a long bias. This is what's going to build it for them. Now, looking at what happened here, looking in this space here, I noticed something stood out to me, and that is when I look at this move here, when I look at this impulse here, or this would kind of be like A, this would be B, and I run that measurement, right? And I retrace this swing low to this swing high here. I noticed something pretty powerful, and that's the retracement went to the golden ratio. The retracement from this swing low to this swing high came down and just wicked down to the 618 retracement. Okay, and this is kind of like one of the Fibonacci ratios that kind of spring forth, like I said, that A to B is equal to CD pattern. So looking at this, since you have a 618 retracement, looking at the extensions, this kind of like projects, and it's a way to tell you what you can expect on the projection side. So what it will do is allow a trader to say A to B is equal, especially since you retrace to the 618. A to B, this is for traders with a long bias, is equal to C and D, giving them a target to continue to create another high, right? So even though it doesn't look like he's necessarily going to be able to break and close above that for a target way up here at 378, what we're going to do is we're going to come in real close. We're going to come into the 5 minute, and I'm going to show you how that just might happen for these traders. Where is he? He was just right in front of me, but now I zoomed in so close. But okay, I found him. He's up here, coming in real close. And again, you see how this is going to be the third time we unfortunately have to talk about this. But this time we're going to use yet another technique. And that's the 2618 technique I want to talk about right here. Remember, this time we've switched over to traders that might have a long bias, and they might be able to use this 2618 technique to get involved. There's a couple of problems with this, and that's that price closed at 357.08, but has pulled all the way back to 352 in the pre-market. That's pretty significant. I don't know where it's going to be when the market opens up, but let me go ahead and talk about this 2618 technique opportunity that's present here. Basically, what we're seeing right here is a double bottom. Remember, we're in close. We're on the 5-minute time frame. So we're looking at this double bottom. That's where the 2 and 2618 technique comes from. And then the 618 stands for 618 retracement, but that's only if you have a double bottom followed by a break and close beyond previous structure. So I noticed that up here you get a break and close above this high here and above the here, which was the V-neck. You get a break and close above that, and you also have a break and close above this high. So so these are all violated. So you got your double bottom, you get a test here, right? You get a test here. He did this is not a break and close above. The highest high is only meeting the previous high, but not closing beyond it. You don't get the higher high, higher close, or what we would call H3C, higher high, higher close. You don't get that until this part happens here. And for a trader with a long bias, they're going to give that a high score. That's going to be pretty significant. They're clapping that it did close above, even if we're on a smaller time frame. If this is the scalping time frame, 5 minute, which it's actually 1 or 2 minute. But for a trader who is okay with coming out to the 5 minute to see that, he's going to be happy. The problem with it is looking at trying to get that 618 retracement. Okay, remember I said you want a double bottom followed by a break and close above previous structure followed by a 618 retracement. And that would basically mean that the trader is okay in building his trade opportunity like this, entering at the 618 retracement. Okay, this is what he would be looking for, an opportunity that looks like entering right here at the 618 and targets up there. Now he wouldn't just do a 1-to-1. You would kind of want to, the trader would probably be a little conservative on his target and his stop, and basically just push his stop, like right, just a few ticks below his entry, and being okay if price action continues to push down, stopping out. But his opportunity, at first glance, it would look like that. But remember, I kept talking about that A to B is equal to CD. So we're going to do that again. So double bottom followed by a break and close beyond previous structure, followed by a 618 retracement, equals, okay, a retest of the high in which it came from for target 1, okay, retest of where he came from, and then an extension. So from this swing low to this swing high, looking at, so when you get a 618 retracement like we're suggesting could happen there in theory, technically, when you're looking at that, if it's a 618 retracement, that usually equals a 1414 extension, which would put the target up here way up at 363. That's what the trade would actually look like. And that would be target 2. This would be TP2 up here. Take profit 2. Okay? So target 1, he take half of his position off. When target gets here, he'd move his stops up pretty tight up underneath it. And then he'd try to see if he can make a run to target 2. Remember, so this is for traders that have a long bias that might not believe that Gartley pattern on the larger time frame is not going to walk, and that this thing is going to continue to create new highs, at least in the short term or on lower time frames. So that covers both parts. A trader being able to come in here and use a 2618 technique. If he can get the 618 retracement, well, he has it because price action has already blown way past that. He basically got a triple bottom now. 1, 2, and where he is now. So it also says that if that bearish action is not still working, because it looks like it might be from the larger time frame, a trader that still has a bullish bias, his opportunity could look like this, because now he's getting a very, very good entry. All the targets and everything based off the extension of this low to this high will still be in effect. But since he's down here, where pre-market is way down here now, he basically just put his stops right under. He put his stops under the double bottom in this case. And his trade opportunity would look like that, which is pretty amazing. So if a trader can get that, if it works out, I'm not saying that that's going to work. I'm saying technically, these are some things that you have to take into consideration based on market structure and ratio confluence. You have to take those things into consideration. But we do need the market to open to see where we are. So that's all I have on that. Replay the video if you'd like to get more information on the advanced pattern recognition that we started off with, the bearish advanced Gartley pattern. If you're interested in things like that type of technique, or advanced patterns of any sort, you'll see me covering pretty much the whole entire spectrum of them, whether they're bat, Gartley, butterfly, shark, things like all of them. We'll cover them all as they present themselves, and they, again, of course, they present themselves when the market is moving sideways. But that's all we got on that one. We're gonna leave this here. It's basically just trying to look at how to deal with Tesla, either your long or your short bias. Hey, like and subscribe to the channel. I really appreciate your support as I try to build out a space for myself as a new content creator, where I can come out here and talk about things that are very dear to me. You can see how passionate I am about this stuff, just from the educational perspective of it, and introducing things in different ways and techniques that a lot of people might not be aware of, that happen amazingly over and over and over. Check out some of the other videos, and that'll kind of like help you vet and validate the things that I'm saying when it comes to the market moving harmonically. And I'll say it again, the market moves harmonically whether you like it, hate it, understand it or not. When the market is moving sideways, after it's done with its major moves, it then starts consolidating, and while it's consolidating, it creates these different advanced patterns, which create trade opportunities. They're counter trend trades, or not. You can use them inside a trend continuation as well to get involved in trend continuation, but for the most part, they're counter trend trading opportunities that are not meant to be used for a long range trade, but just a specifically or strictly targeted opportunity. So you'll continue as long as you guys hang around as I continue to build, put more videos out, put more content out, and my content will improve. Again, I'm new to this space, so I really appreciate the few subscribers that I do have. I think I just hit over 20 subscribers, so I salute and congratulate and thank the people who have subscribed and people who take the time to watch the videos, because these things are going to be packed with all kind of educational content, as you see. Like, subscribe, share, leave your comments. I do read and respond to comments for people who leave them. And I'll see you guys on the next video. Be safe out there.